The end of the year is coming quickly. And if you're a high earner with bonuses or retirement accounts, there's a few things worth reviewing before December 31st that can help set yourself up better for next year. I'm talking about making sure you're maximizing your employer match going into next year, taking advantage of contribution limit increases that have occurred, and adjusting your bonus withholdings so you don't end up with a surprise tax bill. Let me walk you through what to review right now. The first area to review is probably your largest asset, your retirement plan with your employer, likely a 401k. Over the past 10 years, contribution limits for these plans have increased by an average of about $600 per year, with recent years seeing even higher increases. If you're not actively reviewing your contributions each year and making adjustments, you could be missing out on opportunities to put more money towards retirement. Now, if you receive bonuses, there's something else to pay attention to. If you're contributing to your 401k from bonus dollars, you could max out your contributions early in the year and miss out on employer matching later in the year. A client came to us confused by her pay stub change. When we reviewed her pay stub, we found that she had maxed out her 401k in July with her annual bonus. She was kicking herself after realizing she's missing out on 5 months of employer contributions, which in her case was close to $5,000, since her 401k does not have true-up employer contributions at year end. Our strategy we use with clients who receive bonuses and who are trying to max out their annual contribution is to contribute a specific dollar amount from each regular paycheck instead of contributing a percentage from their bonus. This approach spreads contributions evenly throughout the entire year and may help ensure you receive the full employer match. If you're going to make this adjustment, now is the time to start preparing for this change that takes place January 1st. And while you're reviewing your 401k, make sure you're adjusting your contributions to account for next year's limit increases. If you also have a health savings account, there's a similar approach to consider. Your health savings account might not seem as impactful as your 401k, but it's one of the most tax efficient accounts available to you. Contribution limits here have also been increasing, about $60 per year on average over the past decade. That might not sound like much, but compounded over time, those increases can add up to really meaningful savings you can use for healthcare costs down the road. The same bonus strategy applies here as well. If your employer matches health savings account contributions and does not have true-up provisions, make sure you're not front-loading from a bonus and missing out on matching later in the year. Now let's talk about bonus withholdings, because this is where people can get surprised every April. I talk to professionals every year who reach out because they're shocked they owe money to the IRS. Before they started working with an advisor, the culprit was almost always the same. Their bonus withholdings was too low. Income tax on bonuses are often withheld at a flat supplemental rate, sometimes 22%, which may be well below your actual marginal tax rate if you're a high earner. Your bonus feels great when it hits your account, but then next April comes and you may be writing a large check to the IRS. One strategy we use is to work with clients to model out their total tax picture for the year, including bonuses. Sometimes that means increasing withholdings on the bonus itself. Sometimes it means adjusting withholdings on regular paychecks. Sometimes it means setting up quarterly estimated tax payments. And sometimes it means setting a separate tax savings account so you can have funds set aside for your tax bill when you file. It depends on your situation, but the goal is the same: fewer surprises in April. Look, year-end tax planning for your retirement accounts and bonuses isn't the most exciting topic, but getting these details right before December 31st can help you avoid leaving money on the table and prepare you for a smoother tax season. If you're dealing with bonuses, stock compensation, or multiple accounts, and you're not sure what moves to make for your situation, that's what we help clients figure out. Let's talk about your next steps.